What's up everybody, it's Graham Stephan and welcome back to the channel. Now if you're anything like me, you're probably fascinated by the stock market. We see those charts going up and down, and we all want to figure out how to make some serious money from it. But let's be real for a second. Trading is not just about picking the next hot stock or timing the market perfectly. It's a lot more about mastering your mindset and developing the discipline to stick to a solid strategy. That's why in this video we're diving deep into the world of trading psychology, inspired by one of the most impactful books on the subject, Trading in the Zone by Mark Douglas. So if you're ready to ditch those emotional roller coasters and start making smarter trading decisions, buckle up, smash that like button, and let's get started. Now you might be thinking, Graham, what's so important about mindset? Shouldn't I be focusing on finding the best stocks? And look, don't get me wrong, having a solid strategy is definitely important. But think about it, even with the best strategy in the world, if you're constantly second-guessing yourself or letting your emotions get the best of you, you're setting yourself up for disaster. That's why the real key to trading success lies in cultivating the right mindset. It's about developing three crucial traits: discipline, confidence, and risk acceptance. These three traits, my friends, are the foundation upon which you can build a successful trading career. Discipline is all about sticking to your rules no matter what. It's about not chasing those hot stock tips or letting your emotions dictate your trades. Confidence is about trusting your analysis and your strategy. It's about believing in your ability to make sound trading decisions. And risk acceptance? Well, that's about understanding that losses are a part of the game. It's about not letting those losses derail you emotionally. Together, these three traits form the bedrock of a winning trading mindset. They're the difference between consistently profiting from the market and constantly chasing your tail. Now let's talk about one of the biggest misconceptions in trading, the idea that you need to predict every market move correctly. Here's the truth: you don't. In fact, trying to predict the market with 100% certainty is a recipe for disaster. Instead of trying to predict the future, successful traders understand that trading is all about probabilities. Think of it like flipping a coin. You can't predict the outcome of a single flip, right? But flip that coin enough times and you know that the results will eventually even out to roughly 50-50. Trading is very similar. You don't need to win every single trade. In fact, even the best traders in the world have losing trades. The key is to focus on your edge. Your edge is your strategy's ability to produce a higher probability of one outcome over another, even if it's just a slight advantage. Once you've identified your edge, it's all about executing your trades consistently and managing your risk. Don't get too caught up in the outcome of any single trade. Remember, it's a long game, and over time those probabilities will play out in your favor. Alright, let's talk about fear in trading. Because let's be real, fear is a huge factor in this game. And there are four main fears that can really mess you up if you let them. The first one, the fear of being wrong. You see a potential trade setup, you analyze it, and you think it's a winner. But then that little voice in your head pipes up, what if you're wrong? What if the trade goes against you and you lose money? It happens to all of us. This fear can paralyze you. It can make you second-guess yourself, hesitate to pull the trigger on trades, or even exit trades prematurely because you're so afraid of being wrong. But here's the thing, being wrong is part of the game. Every trader, even the most successful ones, have losing trades. It's impossible to be right 100% of the time. The key is to not let the fear of being wrong control your decisions. Accept that losses are a part of trading, and focus on managing your risk so that those losses don't wipe you out. This one's pretty straightforward, right? Nobody likes to lose money. But in trading, it's not a matter of you'll lose, it's the fear of losing money can make you risk-averse, hesitant to enter trades, or quick to exit trades at the first sign of trouble. The problem is, this fear can lead to missed opportunities and prevent you from letting your winners run. Think about it. If you're constantly afraid of losing, you'll never hold on to a trade long enough to see significant gains. The key here is to shift your mindset from avoiding losses to managing risk. Remember, every trade has a potential downside, and that's okay. Instead of letting fear dictate your actions, Focus on determining how much you're willing to risk on each trade and establish clear exit points beforehand. By managing your risk effectively, you can trade with confidence, knowing that even if you're wrong, you're not risking more than you can afford to lose. Let's talk about discipline, which is absolutely crucial in trading, but it's easier said than done, right? Because discipline means sticking to your trading plan even when your emotions are telling you to do otherwise. It's about following your rules, even when it's hard. Think of it like this. You wouldn't go to the gym just once and expect to have six-pack abs, right? It takes consistent effort and discipline over time to see results. Trading is the same way. You need to consistently follow your plan, manage your risk, and not let your emotions get the best of you. Now, I know this sounds boring, but trust me, it's the key to long-term success. One way to build discipline is to have a clear trading plan that outlines your entry and exit points, your risk management strategy, and your profit targets. Write it down and stick to it. Now, discipline and confidence go hand in hand. When you have discipline, you build confidence. And when you have confidence, it's easier to be disciplined. Confidence in trading comes from knowing your strategy inside and out, trusting your analysis, and believing in your ability to manage risk effectively. But it doesn't happen overnight. One of the best ways to build confidence is to track your trades and see your progress over time. I'm talking about keeping a detailed trading journal where you record your entries, exits, profits, losses, and most importantly, your thought process behind each trade. This allows you to identify patterns in your trading, both good and bad, and make adjustments as needed. Over time, as you see yourself making better decisions and your account balance growing, your confidence will naturally increase. Remember, confidence is not about being right all the time. It's about trusting your process, managing your risk, and knowing that even if you hit a rough patch, you have the skills and the discipline to get back on track. You ever notice how our beliefs can really shape our reality? Well, this is especially true in trading. The beliefs you hold about the market, about yourself, about money, they can either empower you or hold you back. For example, if you believe that the market is rigged or trading is just gambling, well, guess what? You're probably going to trade in a way that reflects those beliefs. You might be hesitant to take risks, or you might jump into trades without a solid plan, essentially gambling your money away. Our beliefs can either empower or hinder our trading. This chart highlights the key areas where aligning your beliefs with effective trading principles can make all the difference. These limiting beliefs can create self-fulfilling prophecies. If you don't believe you can be successful, you're probably not going to put in the effort required to actually succeed. So it's time to examine those beliefs and challenge the ones that aren't serving you. Now, on the flip side, empowering beliefs can have a tremendously positive impact on your trading. If you believe that the market is a place where you can consistently profit by following a disciplined approach, you're much more likely to put in the work to develop that approach and stick to it. Instead of seeing trading as gambling, see it as a skill that can be learned and mastered through practice, just like any other skill. Focus on what you control, which is your own actions, your risk management, and your emotional state. Remember, your beliefs are not set in stone. You can choose to adopt more empowering beliefs that support your trading goals. It's all about shifting your perspective and focusing on the possibilities rather than the limitations. So take some time to reflect on your beliefs about trading. Are they helping you or holding you back? By identifying and challenging your limiting beliefs and replacing them with empowering ones, you can unlock your full potential as a trader. Now let's talk about putting all this into practice. You know, I love tracking things from my net worth to my business expenses, and trading is no different. That's why I want to introduce you to the concept of a trading journal. Think of it like a fitness tracker, but for your trading mind. It helps you identify patterns in your behavior, evaluate your strategy's effectiveness, and most importantly, builds accountability. And trust me, that accountability is crucial when you're navigating the markets. For every single trade you make, you're going to log a few key things. First, jot down your reasons for entering the trade. What signals did you see? What did your analysis tell you? This helps you avoid impulsive decisions and stick to your plan. Next, and this is a big one, write down your emotions during the trade. Were you feeling greedy, fearful, overconfident? This is where the real self-awareness comes in, and it's essential for mastering those emotions. Finally, record the outcome of the trade. Did you win or lose? How much? This isn't about dwelling on past results, but rather about identifying patterns and understanding how well your strategy is performing in different market conditions. Now, you might be thinking, Graham, this sounds like a lot of work, and you know what? It can be. But let me tell you, the insights you gain from a trading journal are absolutely invaluable. It's like having a personal trading coach right there with you, helping you identify your strengths and weaknesses. Remember, trading is a skill, and like any skill, it takes practice and consistent effort to master. A trading journal is your secret weapon for accelerating that learning curve and taking your trading to the next level. So, don't skip this step. Commit to tracking your trades, analyzing your results, and using that knowledge to refine your approach. Trust me, your future self will thank you for it. Alright guys, let's talk about emotional detachment. This is huge in trading. You can have the best strategy in the world, but if you're an emotional wreck when the market moves against you, you're toast. It's like driving a Ferrari with the parking brake on. You're not going to get very far. Think about it. When you let your emotions take over, you start making impulsive decisions. You chase losses, jump in and out of trades too early, and basically sabotage your own success. The key is to detach yourself from the outcome of any single trade. Remember, trading is a marathon, not a sprint. You're going to have wins and losses, it's all part of the game. Instead of focusing on the money, focus on the process. Stick to your plan, manage your risk, and let your edge play out over time. That's how you win in the long run. Now, I know what you're thinking. Graham, easier said than done, right? And you're not wrong. It takes time and practice to master your emotions. But trust me, it's possible. One thing that helped me was tracking my emotional state after each trade. I'd give myself a score from 1 to 10, with 1 being completely freaking out and 10 being totally zen. Over time, I started to see patterns. I noticed that my emotional score was directly correlated to my preparation and risk management. The better prepared I was and the smaller my risk, the calmer I felt, regardless of the outcome. So how do you build emotional resilience? Start by developing a solid trading plan and sticking to it. Don't be afraid to take breaks when you need them, and remember to focus on the process, not the P&L. Let's talk about consistency in trading. This is the holy grail, the thing that separates the amateurs from the pros. But here's the thing, there's no such thing as a perfect trader who wins every single trade. Think about the best athletes in the world. Michael Jordan, Serena Williams, Tom Brady, they've all had their fair share of losses and setbacks. But what sets them apart is their ability to bounce back, learn from their mistakes, and keep performing at a high level over time. Trading is the same way. You're going to have losing trades, it's inevitable. The key is to keep those losses small and manageable, and let your winners run. Consistency isn't about being right all the time. It's about having a system that gives you an edge and executing it flawlessly, day in and day out. So how do you achieve consistency? It all starts with having a solid trading plan. This is your roadmap to success, your blueprint for navigating the markets. Your plan should include your entry and exit criteria, your risk management rules, and your profit targets. It should be based on sound trading principles and back-tested to ensure it has a positive expectancy. Once you have a plan, the key is to follow it religiously. Don't deviate from your rules just because you're feeling emotional or you think you've spotted a can't-miss opportunity. Remember, consistency is boring. It's about doing the mundane things day after day, week after week. But it's also the key to long-term success in the markets. Mastering the market isn't just about strategies. It's about developing the right mindset. The lessons we discussed today are inspired by a book that completely changed my perspective on trading. Start implementing these ideas in your trading, and watch your performance transform. If you found this video helpful, hit that like button and subscribe to the channel for more videos on trading, investing, and personal finance. And be sure to share this video with anyone who wants to take their trading to the next level. Thanks for watching.